Hi, I'm Katelynn, and this is my project Mortgage Crisis. And the first thing I'll be talking about is the map of misery and how California has the biggest mortgage crisis, obviously, because it has the most red. And Sacramento, for example, has 25.8%, which is not good at all. And the definition of the mortgage crisis is an ongoing economic problem manifesting itself through liquidity issues in the global banking system, leading to foreclosures. The crisis began with the bursting of the U.S. housing bubble and high default rates on subprime and other adjustable rate mortgages, made to higher risk borrowers with lower income or lesser credit history than prime borrowers. It accelerated in the United States in the late 2006 and triggered a global financial crisis during 2007 and 2008. The history of the mortgage crisis of the past is during the 1980s, savings and loans made the majority of our loans in our country. During the savings and loans crisis from 1986 to 1995, the number of U.S. federal insured saving and loans in the United States declined from 3,234 to 1,645, which is not good. For our history for the present and how it has changed, it changed in the early 90s when Wall Street changed the product to structure investment vehicles, which meant that it was separated instead of put into one bank. And this led to a global demand for mortgage-backed securities because SIVs allowed investors to get a much higher rate of return. Wall Street relates to economics. How it relates to recession. It makes the mortgage crisis like a vacuum cleaner, for example, because people are out of work and don't have the money to pay for it. This makes it a double whammy because they lose their house and also don't have any money to afford to live. So it's just horrible. And how it relates to taxes. For example, Placer County depends on sales tax. And that equals bad for them because it is going to have to drop because there is less tax revenue. So less tax revenue equals bad for them, so they're not getting as much money. Current event is one that I chose as prime rate. Prime rate is caused, and as houses are refinanced from loans 5 years ago, the people who bought them are being forced to pay ridiculous rates on a house that has depreciated in value. This causes people to not be able to afford to live in their house, and they lose their house as well as their credit, which causes stress in the homes and also causes a lot of violence in the homes, which is increasing lately because a lot of people aren't able to afford where they are living. An old event that occurred was 9/11, and this put a huge damper on the economy because we lost so much money from it, and it affected the federal funds rate from 6% to 3.5%. My personal views on this are three things. It has to do with greed, because individual people wanted to take a bigger risk and put money in bonds and didn't really realize that the bonds were not going to go their way and have to get money. They're losing money instead. And they're backed by federal government, so people thought that it was safe. But if something goes bad, then it's worth nothing, and most people don't realize that they'll just lose it all. And also Wall Street, they took mortgage and then divided it up into many places, which was supposed to help people. But in the end, it didn't help people. They said, instead of having 2%, people would get 9%, but that really didn't help at all because it made things worse for everyone. And then the lenders and bankers, And the reason why I think they did bad is because they were being very irresponsible with no documentation loans, which means that they weren't making sure that people had enough money to pay ahead of time, which also made them realize that they lost money because by them not having enough money, they couldn't pay for their house payments. How it will affect us in the future is it pretty much all depends on economy and the home prices. Oops. So if you're doing good, then you're pretty much fine because you'll be able to do the payment and pay it instead of when the economy is bad and you don't have any money, you can't pay your house payment, and then it turns in bad, and which turns into the mortgage crisis because people can't afford their houses because the payment rises and you can't afford it even without it rising. And so I think it will affect us in the future. And the other thing is the values will go down, but then we will have to pay a bigger down payment. This will be hard for us because it will make us have to do a larger down payment, and many people at a young age are not able to do that. People were getting away with it by being able to pay a certain amount and not having the money all at once, which was so much easier for many. But that's going to affect us in the end because we're not going to have enough money because our jobs aren't going to be able to pay us enough to get us a good house that we can pay for. And here's my works cited, and this is my project for the mortgage crisis. I have a YouTube video to show you, and that is right here.
And now to a new fallout from the ongoing mortgage crisis. Today, the CEO of Wells Fargo called this year's housing slump the worst since the Great Depression. And there are indications that the foreclosure epidemic is causing people to not only lose their homes, but also their marriages and their families. KCRA 3's David Bienick is live in Stockton with what looks like to be a disturbing trend. David?
Good evening, Edie. This is a trend that domestic violence counselors both here in Stockton and in Sacramento have been noticing recently, that as husbands and wives struggle to make ends meet, they're starting to take out their frustration on each other.
Helpline, this is Vivian. How may I help you?
Most of the calls to the San Joaquin County Crisis Hotline still deal with abuse related to drugs and alcohol.
Are you in a safe place now?
But counselors say these days, more and more callers also mention problems with money and the mortgage.
A lot of times the abuse starts because they don't have enough money to make those mortgage payments. They're so high.
In fact, the Women's Center in Stockton says since August, its domestic violence cases are up 12%, due in large part, the director figures, to the growing number of families losing their homes or close to losing their homes through foreclosure.
If they're not dealing with the stress or talking to somebody about it, it is going to escalate and come out in forms of violence.
This woman, who doesn't want her name used or her face shown, says for 2 years she owned a home with her now ex-husband, but when the payments went from $1,700 a month to $2,300 a month, he started to change.
And when he don't have enough money to pay the bills, he is more angry.
And while domestic violence has always affected every level of society, counselors say this latest wave of mortgage-related calls seems to be hitting the middle class especially hard. And now, with the holidays just around the corner and families feeling additional pressure to buy gifts, domestic violence counselors worry that the number of calls will only increase.
I think we really have to.
And that is my project of mortgage crisis. Thank you.